Let's take a look at the panic selling we've seen in the banking sector in Nigeria. Would you say it's a case of what's happening on the global scene, or is it the decision by the Central Bank of Nigeria to re-nationalize those lenders?
Yeah, hi, morning, Samantha. Essentially, you are correct. The Nigerian banks and the Nigerian market as a whole has taken a significant beating this week. And a couple of things. Is there local crisis going on? No. Can it be partly blamed on the nationalization? Yes. But more importantly, what's really going on in Nigeria is the global sentiment is what is significantly affecting the Nigerian market. And because the Nigerian banks are the most liquid, Nigerian banking sector is the most liquid, typically what you find out is when there's a sell-off or a rally, the Nigerian banks get affected the most. So currently what's going on is, to a larger extent, on balance, is pretty much due to the global negative sentiments and less of the nationalization concerns.
Now, news out today is that all three nationalized banks have repaid the CBN's rescue loans from 2009. What is your take on the governor's decision to pull the trigger before that September deadline and nationalize those three banks?
Okay, the news came out on Friday, and just like the market was, I was, surprised as well. But the CBN had certain reasons for doing what it did and doing it when it did it. Okay, there were already very evident signs that these banks, if the CBN had waited till 30th of September to pull the trigger, essentially these banks would pretty much have been dead, more or less. Okay, they struggled to reach deposits. Their level of interbank borrowings was very significant. Probably in excess of 400 billion. Okay, so these banks, they were reliant on the sector for survival, as opposed to them being able to survive on their own. And it was increasingly becoming clear that if CBN had waited till 30th of September, would have had a worse situation on our hands. Okay, so what we have now are entirely new banks, three new banks entirely. They're new names. You can argue that there's actually no franchise value to those names at this point. They have to advertise. They need to get their names out there in the market, to get any new business flowing to them significantly going forward.
And they only represent 6% of Nigerian assets when it comes to banking assets in the country. So relatively small there. 2 years on from when banking sector reforms commenced, that was on August the 14th, 2009. How would you say overall the banking sector has been shaken up by the CBN interventions and also the M&A activity that we've seen now with 4 mergers and possibly 5 mergers on the cards?
Okay, simply put, what's going on is the big banks remain big. Okay, but more importantly, what's happening is we have 4 mergers that are going to happen, and that's very likely to happen. Okay, so when you look at the competitive rankings of Nigerian banks, okay, that top tier is going to get shaken up. So you have a situation where a bank like Access Bank can easily, topple UBA from the number 3 position. But that notwithstanding, that's very transient. But that's just how aggressive, or should I say how big the tier 2 banks will be. Okay, the tier 1 bracket, will increase from 4 to 7. Okay, their market share will increase from 47 to about 65%. Okay, so there's a lot of concentration going on right there at the top. Okay, but, broadly speaking, the Nigerian banks in nominal terms will reduce from about 24 previously to about 20 or 21 when ETB finalizes its discussions. But, I think the bigger thing going on is the big are remaining big. The top tier is getting concentrated. Okay, and the tier 2 banks will have to find very niche areas to focus on. And the market is big enough for everyone to play.
The market's big enough for everyone to play, but there are some risks that have been identified with asset quality now falling down the ladder of risk, and currency risk identified as a key concern, with Nigeria's banks' balance sheets around 80% and Naira funded on the asset and liabilities side. Given the fact that the Naira is quite strongly correlated to what's happening with global markets and global sentiment, and as well as that oil price, how much of a concern is this going forward?
Okay, like you rightly said, yeah, asset quality is validly less of a concern for Nigerian banks in our view. Okay, and that's largely due to the continued, and should I say generous asset quality cleanup, which AMCON has executed over the past couple of months. Okay, if there's going to be any new risk, if anyone has to start looking for new risks, okay, so a larger extent is going to be currency risk. Okay, and that's due to the correlation of the Nigerian economy to oil price, which is dependent on what goes on in in terms of global sentiment. And for Nigerian banks, like you said, the balance sheet is about roughly 80% funded by in Naira. Okay, so when you look at the liability side, the banks have the ability to repay. Okay, so in terms of funding cost pressures, that is largely limited. On the asset side, the assets are, lending is largely done to, parties who generate dollar revenues. Okay, when dollar lending has to be done. Okay, so on the asset side as well, those things are largely checked. So for Nigerian banks, whilst it's a risk, yes, but the magnitude of the risk when you stack up Nigerian banks versus other, should I say, developed market banks, Nigerian banks, fare strongly well. The base currency is the bigger currency when it comes to transactions being done in Nigeria.
Right, as we enter this new era in banking in Nigeria, where do you see the biggest growth opportunities for the banks, and which banks do you see as best positioned to take advantage of these?
Okay, the going forward opportunities, some of them are pretty simple, some are more top-down, dependent on reforms. Okay, so the simple ones, you look at e-banking and retail banking, okay? The CBN has already, should I say, done a pilot run for e-banking. The deployment, starts in December. That's a massive opportunity. You can look at M-Pesa and how it succeeded in Kenya. That's pretty much what CBN is trying to achieve over here in Nigeria. Okay, retail banking is also another, should I say, massive opportunity. And I think the story exists. We're all aware of the story. It's just for the banks to take that, delve into retail banking going forward. The top-down driven opportunities would be things like power, infrastructure, and agriculture. And I think pretty much what's going on in there. But all that will depend on the will, and should I say, continued drive from the CBN and the federal government to get these sectors rolling going forward. The banks have the capital, they have the liquidity to support lending in those areas. And I'll argue Nigerian banks are very strong when it comes to capital and liquidity. Benchmark them against any other market, and you'll see.
We've seen the sharp sell-off in banks over the past few sessions. The likes of top-tier banks are falling by the maximum of 5 percentage points. Is this an opportunity to now come in and pick these stocks up on the cheap?
It's a massive opportunity, I must say. It just happens that in the discussions, particularly, specifically, for us at Renaissance, we will look at first Zenith among the tier 1s and Skybank among the tier 2s. Okay, but there are some other stocks which, because of the massive sell-offs they've had in the past few weeks, GTB results should be out this week, offers you a dividend yield and a decent capital appreciation opportunity. Diamond Bank is your mid-term, should I say, wild card in the Nigerian banking space.
Would you be touching the banks in the merger and acquisition space, those rescued lenders?
At this point, our opinion is these banks in the medium term, they'll struggle, or should I say, the gap between the big banks and the emerging banks, would only expand. Okay, these banks have to do with change, they have to do with integration. Okay, so at this point in time, you can actually position yourself somewhere else, get decent returns in the near to medium term before you now revisit the acquiring, or should I say, emerging bank story. Pretty much that's how I'll play at this point in time.